Last month, CMHC came out with their annual rental market report. The report shows that the demand for rental housing outpaced the increase in supply, leading to the national vacancy rate to considerably decrease in comparison to 2021. Let's get into what these changes mean for investors. The large number of immigrants entering the country, the increased cost of home ownership, and a variety of other factors have increased the demand for rental housing within the country. This has had a significant impact on Canada's vacancy rate, the percentage of all units available for rent. In 2022, the national vacancy rate for purpose-built rental homes reached 1.9%, down 3.9% from the year before, and the lowest rate we've seen since 2001. In fact, the average vacancy rate for purpose-built rentals from 1990 to 2021 was 3.2%. Last year's vacancy rate for condominiums was even more impressive at 1.6%. The average rent for a two-bedroom condo unit cost $1,900 in 2022, a significant jump from $1,700 in 2021. Plus, rent increased by 18% in two-bedroom units given to a new tenant, while the rent in units where the tenant did not change increased by nearly 3%. The reason for higher rental prices and fewer rental units is that there is more demand than there is supply. These statistics stem from the extremely strong demand for housing in Toronto and the GTA in comparison to the rest of Canada. Stats Canada states that over the last 50 years, Ontario saw its highest number of immigrants. Plus, about 80% of these immigrants stay in the GTA. The City of Toronto is an attractive place for many, as it is a major employment hub and the home of some of Canada's most respectable universities, including the University of Toronto and Toronto Metropolitan University. There are more people who need housing than there are houses available right now. This means we urgently need to build new homes. You might be asking what's being done to combat this supply deficiency. Toronto is facing the largest divide between supply and demand. Despite the GTA experiencing the highest increase in its purpose-built rental units in decades, adding over 7,000 units to the supply, it was still not enough. Newly built condos play a big part in increasing the number of rental units available. However, fewer were finished in 2022. The number of condos completed in Toronto dropped by 23% to just over 17,000 units from May 2021 to May 2022. The main reasons for this decline were supply chain issues and labor shortages. So what does this mean for investors? Investing in Canadian real estate, especially buying properties in and around Toronto, has proven to be a reliable investment strategy for decades and will continue to be for years to come. The CMHC report reveals that rental properties are now in demand more than ever, and being a landlord is becoming more and more profitable. While high interest rates have made many cautious of investing in real estate, smart investors can take full advantage of new incentives from developers and lower prices. Find out the latest information about the GTA's housing market from our Plenum agents who will help you make smart investment decisions and receive the best incentives from developers. Thank you for watching another GT Homes exclusive. Remember to subscribe and to visit us at gtahomes.com.